The debt ceiling showdown continues, and the deadline is now fast approaching. What will this mean to the country? Will we actually default, and what will happen if we do? Joining me now is our friend Ted Jenkin, the CEO of Oxygen Financial, the man who knows all about money and finance and debt. So, Ted, here we are. The big question, do you think this is a so-called doomsday situation?
I don't think it is yet, and the odds are that we won't default. Listen, since 1960, Congress has acted 78 times to raise the debt ceiling, and that's just in the last 63 years. But the bigger our debt gets, the bigger of a game of chicken that we're seeing being played between the Republicans and the Democrats, because we don't really have a debt limit problem. We have a budget problem, and they want to solve it differently. One party wants to do it by raising taxes. The other wants to do it by trying to decrease expenses. There's got to be some meeting of the minds in the middle. Otherwise, this will be a problem next year and the year after.
So what would happen if the debt ceiling is not extended? Where do we go then?
Well, Jeff, if the government can't pay their bills, it would be really catastrophic. First of all, we would see a major sell-off in the U.S. Treasury market. At home, your 401ks would plunge both in bonds and stocks. We would probably tailspin into a pretty serious recession with high unemployment. Those that have credit cards and mortgages, rates have been going up over the last year and they go up higher. But what would be worse here is the millions of Americans that depend on getting a Social Security check, and our military that battle for us every day, they wouldn't be able to get those federal benefits. And so that would be a real problem. All of it would be pretty catastrophic. I do think it would shake not only the U.S. economy, but the world economies.
Could the country avoid a default without raising the debt ceiling, though?
I mean, there are some wild scenarios here. There are some special accounting measures that could free up roughly $400 billion over the short term. But one thing you'll see in the news quite a bit here is what the government can do underneath the 14th Amendment, and the Treasury potentially being able to print or mint a coin of almost any denomination, meaning they could almost think about like 3D printing $1 trillion coin and sticking it in the bank. It just depends how you interpret the 14th Amendment. I think we'll see more of that come out if we get closer to the deadline.
So do you think this will continue to be a problem in the country? I mean, is this just one of many times that we're going to face this sort of doomsday deadline?
I think, yes, it's going to continue to be a problem. Look, if you've got $100,000 of credit card debt at home, the answer isn't all the time to max out that credit card and then take out another credit card. It's just simply not sustainable. We run a $1.5 trillion per year deficit in the federal government. So we have to figure out whether it's a combination, like I said, of raising taxes and also decreasing expenses, how we ultimately balance this budget, or yes, it's an ongoing problem.
If you have $100,000 worth of credit card debt, this is probably a good time to have some counseling and maybe an antidepressant.
Believe it, Jeff, with $1 trillion of credit card debt, there are a lot of folks out there, they may not have 100,000, but it's in the 5-digit arena. It's the biggest it's ever been in the history of the United States.
Oh boy, I'll tell you what, life is hard without making it even harder. Ted Jenkin, the CEO of Oxygen Financial, as always. Ted, thanks a lot.
Okay, thanks, Jeff.